Hello, I'm Brandon, and this is Real Market Play, the channel for those who take success seriously. Today we open the vault to talk about one of the most coveted, powerful, and dangerous assets in the business world: gold. More than just a metal, gold has always been a symbol of power, wealth, and trust. From ancient empires to the modern reserves of central banks, it remains the ultimate reference of value in times of stability, and especially in times of crisis. Global gold production reaches over 3,000 tons each year, while the total amount ever mined in history now exceeds 200,000 tons above the ground. It is a surprisingly small supply compared to worldwide demand, and that is why gold has always defined wealth across human history. Paper money can lose value, digital currencies can collapse, but in every major crisis, from the Great Depression of 1929 to the financial crash of 2008, and even in today's conflicts, gold continues to be the absolute safe haven. Gold is the reserve par excellence. Central banks keep bars in fortified vaults as a sign of solidity. Refining and certification turn the ore into an international asset. 99.99% pure bars accepted worldwide. Refining is what guarantees quality and liquidity. Without certification, gold is nothing more than a risky promise. But behind the shine lies a dark side. The clandestine activity of illegal mining, especially in South America and Africa, generates social, environmental, and financial problems. Uncontrolled extraction feeds contraband routes that cross borders, often disguised in other shipments and backed by forged documents. This illegal gold fuels money laundering, corruption, criminal networks, and even armed conflicts. That is why gold trading is considered one of the most dangerous markets when done informally. And here is the crucial point. Safe ways to trade gold exist, but they are few and extremely strict. When all documentation is in order and thoroughly verified, there are basically two methods. The first is brinks to brinks, gold kept in custody and transferred through armoured logistics with full insurance. The second is bank to bank, when the gold is already deposited in a custodian bank under the seller's name, and the transaction is simply a change of ownership, with the buyer's payment confirmed in the bank account. Everything else is risk. Arranging meetings with strangers, dealing in luxury hotels or airports, visiting improvised mines or warehouses, all of that is not just unadvisable, it is extremely dangerous. Gold is small in volume, but concentrates millions of dollars in a single box. Without maximum security, no one should ever take that risk. That is why specialized compliance is not an accessory. It is the heart of the transaction. Serious companies verify documents, confirm the legal origin, check the financial capacity of the parties, and validate the refinery's certification. And here is a warning. Without certified documentation, assay reports, and clear proof of origin, any deal must be stopped immediately. Trading gold without those requirements means walking straight into fraud, financial loss, and even physical danger, including kidnappings. Gold fascinates because it combines wealth, reserve of value, and an aura of power. But that same fascination attracts speculation, contraband, and fraud. For anyone aiming to enter this market, there is only one path: impeccable documentation, secure custody, and absolute compliance. Anything outside of that is not business. It is a trap. And now I ask you, if you had to choose one indispensable requirement before closing any gold deal, what would it be? Leave your answer in the comments. The best contributions may inspire future episodes. Watch the other videos on this channel, subscribe to Real Market Play, share this content, and turn on the notification bell. Real knowledge becomes real business.